Good morning and welcome to Trading with Larry, the smiling trader here. Good morning, everyone. I'm not smiling when I'm trading, by the way. I'm smiling pre-trading. I've actually been in my office for over an hour, going through the news, going through last week's action, and trying to assess what is going to happen today to get everybody ready. I'm joined by my partner in crime, Eric Shamilov, coming to you with a very fancy shirt. Again, he's
Not
the
that
designer guy. I'm going to call him designer trader. So he's the
bad. Oh
designer
my God.
trader. And behind us is Thomas Maples. There he is, touchdown T, my head analyst who sits next to me and gives me all my trading levels. So good morning, all. Hope everybody had a great weekend. We're back. So we can go over last week, 5 straight up days coming off of the the China news and a continuation on. Again, markets are lower. The trade that I think has played out best here is the bond trade that we talked about. U.S. Treasuries. Interesting. On Friday, right after the close, we had a downgrade of U.S. debt. Okay, that kind of set the ball in motion. But really, I think a lot of it had to do with this, and you were queuing in on it, and I don't even think you knew what you had was the expiration of options,
I
the
love that. You were
serial
right, but you don't know
expiration.
why you were right. That's great.
No, I don't. I don't think so. And they had to roll this QLD trade or whatever QLID trade, which is the Nasdaq overriding product for J.P. Morgan. They had that going on. They had a lot of stuff, but really, if you look at the market, the bond market is falling apart here. And I think it has to do with the debt downgrade, but really more what happened after the close, which I don't even know if you saw, but you know who the number three holder of US debt is right now?
Number three. Would it be
China.
Japan?
China.
China.
China has been dumping our debt like there's no tomorrow. So,
I saw
they're
I saw a number like they sold only 20 billion. Is that correct, or was it
I
much
don't
bigger
know. I
than
don't have the numbers in front of me as far as what they sold, but I know they moved down in line. Um, and obviously they're getting out, and I believe they're going to get out of most or all of it. And again, we talk all the time about the trade deal and this and that. Um, I think it's going to be very difficult to do this trade deal in particular, but pretty much all the trade deals. Like I saw they had a deal with they want to do a deal with South Korea, but they want them to like give up like their entire country to do the deal. Like it's it's pretty unbelievable. And last week was a quiet week on the Trump front because he was in the Middle East all week getting free planes and having them buy his cryptocurrency. And I don't know why do we want that plane? I'm trying to understand why we would ever want that plane. Like, what is the benefit of having that plane?
you're asking me?
I'm
It's a free
asking you.
plane, right? It's a free plane.
It's a
I
free
understand what you're
plane.
saying.
Wait,
The
it's a
conflict
free
of interest
plane from
there.
another country that could have all kinds of crazy stuff on it or in it that we can't even figure out. Okay. They could crash that plane, maybe. Who knows what they can do? Why are we even dealing in that front? It makes no sense. And no one as a president would take that except him. I'm just telling you, it makes no sense. It's a meaningless number. Um, he just wants to fly around in a new plane. I get it on his front. He wants a fancy Air Force One or whatever. So I just think the Middle East trip was really eye opening. And he's back now. So I expect there to be a lot of more headlines on the trade front potentially. And the market, in my mind, is in an overshoot by at least 5%, maybe 10 here. And once we get to those levels, then we're going to see what the market's made of. But really, the scary trade out there is the bond market. It's in free fall. Um, I would say the curve is steepening, which means we probably have lower to go here. I'm looking at the 30 years down two figures today, two sticks, as we would say. Pretty big move there. And the 10 year is ticking lower and lower and lower. It's two ticks off the low, and I think we're probably, I haven't checked the yield in the last hour, but we're probably 456. We're 455.7. So we're 456. Um, if we drift above 460, we're hitting 475. And again, I don't know where the line is where people start to panic and positions start to unwind and that spread starts to be taken off. And I think you'll start hearing a little bit about that shortly. But what do you make of rates ticking up in an environment where you got to believe that there's going to be slowing coming down the pipe? Is it the fact that we have to finance so much debt? Is it the fact that China, which was the largest buyer of our debt, is no longer buying debt? Is it the fact that inflation is going to creep into the picture? What do you think it is? Like, I'm not sure,
Yeah,
and
it's
it's
a combination.
freaking me out. It's really freaking me out because the
Yeah,
market is holding up incredibly well in the face of this, and it's like we've gone up and up and up here, but we haven't had an outside down day in a month, pretty much from when we went to the low. I think it was 3 weeks ago or 4 weeks ago this Monday where we traded 5,100. So we've gone from 5,100 to 5,960. Okay, 800 S&P points, which is like 17, 18%. We're due for minimally a 5 to 10% pullback here. Um, I'm not saying it's coming right away. The first part of the pullback traditionally in trading becomes a lot harder. So keep an eye today. S&Ps are down basically about what 65, 70 points. If they go down more than 100, today, I think that's a sea change. We're nowhere near that. We're only down 65. But if we get down 100 plus, it could be, it could get interesting. And I know before we got on the air, you talked about the debt downgrade as sort of being the catalyst. That potentially can be true, but I just think we're coming off a completely overbought, and it's more of an excuse because I've traded many times when the debt had been downgraded, and I remember, God, it must have been 2012, 13. I'm sorry, 2010, 11, one of the first debt downgrades. I remember I was in my office Sunday night thinking that the market was going to crash, and the market didn't even go down. So, we've had times with debt downgrades that the market's actually gone higher. It just, I think we're in a very overbought position here. And, I think we're going to have a down day. We discussed the bonds. That's really my key cue. I've been telling you to keep that on your screen right next to the S&Ps or equities or stocks or whatever you're looking at, because that's going to come into play here. We can look at currency. I think you disagreed with my trade in the euro, but the dollar is moving negatively against all currencies here, which leads me also to believe that the market should remain weak because the dollar has been fairly strong in this up move. But again, weird levels. So the S&P, let's look at it. The S&P is 300 points off an all-time high, okay, which is crazy. So that's basically less than 3%. It's like 2% from an all-time high, okay? The low of the year in the euro was 102, 103. It's trading at 113. What is that telling you? Is that telling you why would the dollar have such weakness if the market is okay? People want out of the US dollar, it seems. And I'm not exactly sure why. And that doesn't equate to the equity market. So I was wondering what your thought is on that.
Yeah, so the dollar not going up, I think, is you kind of have to look at that with rates continuing to go up, which I think is a global phenomenon. And you look at Japanese rates, look at JGBs. Those rates are at an uncomfortable level in Japan. We had a big episode last summer because of Japanese rates. So this is a global phenomenon with rates going up,
Yeah,
primarily
but
in the U.S.
let me call a timeout for a second. I agree with you, but this is the high yield basically on 10-year JGBs of the whole move ever. And when we had the little hiccup, we were much lower rate, and our rate was 5%. So something weird is going on. Like we're only at 456 or whatever, and these Japanese rates, I think, are at like 160. I got to take a look at it, but these are like high yields. So around the world, yields are ticking up, especially in Japan, and that doesn't sound like a high number, 155. But you got to remember that has been negative for years and years and years. So it's at 150 actually. So if you look at a chart on that, it's straight up. So I don't know what all this stuff means.
Yeah,
It was higher.
the macro picture isn't jiving with what the stock market is telling us. That's for sure. And what's even weirder is when U.S. rates go up like this. Is it an inflation thing? I mean, break even inflation rates haven't really been going up as much as the 10-year on the treasuries. And typically, when U.S. rates go up more than other countries, you have that rate differential. Usually, the dollar is going to go up too. The fact that the dollar hasn't been going up, I think, uh, is a big question mark. The fact that rates keep going up, that the dollar and look, we talked about Moody's downgrading on Friday. You mentioned it may be an excuse. That's something we talked about. Is this real? Right? This wasn't the headline that the Bears were looking for. What the Bears were looking for was one of those, China is walking out the meeting, or China is, you know, rejecting a deal proposal. That kind of headline. I don't think they were looking for a third tier rating agency to come out at 445 on a Friday and downgrade you as that. I'm not sure the market. I mean, that just has priced in written all over it. So
But
I
how
think
do
today,
I don't then I mean it's priced into what? Like maybe it's priced in if we're at 5200 or wherever. How
what
is
did
it
the
priced
Moody
in
say?
here?
What, we have too much debt.
What
The
do you mean
market
you can't finance the debt and they want to make it that, it's going to be more expensive to finance the debt because the credit rating of your country or your debt is now downgraded. So that's
right.
not a
So
positive.
right, it's not positive. It's not. So my real question with this Moody's downgrade, and I don't know the answer to it, but it's important to ask the right question. Does this incremental downgrade now cause a sell off? Meaning, like, are holders of our debt now obliged to sell because of that incremental downgrade or not? If they're not, I don't know, maybe.
Of course they're not. But I think really the takeaway, which is the important takeaway, is when we came out, okay, bottom line is China was a net seller of our debt, and they're not near the biggest holder anymore. I think they're two or three, and they're going lower. And I don't know how Donald Trump is okay with that. I know he wants them to buy our products, okay, but they're dumping our debt like there's no tomorrow. Okay, what? Why would they buy our products? They're so angry right now that you have no idea. Okay, they're playing the game because they have to, but they're angry. Okay. And you're never getting them unangry. Okay. Unless you fully take the tariffs off. And we talked a little bit about this, and I had lunch Friday with a friend of mine. And let me make you aware. Okay. The 30% tariff is on top of the 25 that's already in. So they're at 55. There's no way they can exist at 55%. No one can. Okay. That tariff is too high. Their goods are going to be tariffed too high, but there really are goods. There are goods. What's coming in from China is only our stuff. So I'm just lost. I really am. I'm not understanding what we're trying to accomplish, other than what we talk about every day, that they just want to make money by by doing this. But what's happening is these container ships are coming in empty, and they're not even coming in as frequently. So the bottom line is they've adjusted. China's doing deals all over the world. They're just not doing deals with us. So I think it's a negative. You don't think they're doing deals all over the world? You don't think that
I
they
don't
okay,
know.
okay, dude.
I don't know.
Okay, listen. They're the biggest, baddest player in town. Okay, they literally have an unbelievable amount of power. They can get deals done anywhere they want
Yeah,
outside of us.
yeah,
Okay.
but they've been hurting from this as well. The notion that they're okay with that they're in a better position to absorb the shock of tariffs. I don't 100% agree with. But there's something you said before. There was no real Trump headlines last week. I thought there was a big headline that may have gone completely under the radar, which is that Trump said in the coming weeks, in the next 2 or 3 weeks, he's going to come out with tariff rates basically on every country. What the final
Dude, I
form?
thought he already did that. I thought he already did that. Now he's going back and doing it again and again. Come
But
on,
the
dude.
premise is
Listen,
that,
I think you gotta stop. I think you gotta stop watching and listening to that guy. That's all I could say. I mean, you don't even. This is so bad for businesses. It's like my friend who's a big manufacturing guy. Okay, he's telling me he doesn't even know how to run his business. He doesn't even know what his tariffs are. He brings goods in from China. He doesn't even bring them in anymore. It's like nobody knows where they stand. That's the biggest issue here. If they knew where they stand, they would make moves, but they don't. They don't know tomorrow if they move their manufacturing to India, like Apple. Okay. Literally, Apple just said, hey, we're going to move out of China. We're moving into India. Trump's like, you got to move it here. They can't move it here, Eric. It costs too much money, and no one wants to make it. How many people do you know that want to sit in a factory and go like this and put screws into an iPhone?
well,
Not a lot of people.
if they make the iPhone here, the iPhone's going to be selling for $3,500.
Okay,
So
so you, who is saying this is good and all this, how can the company stay in business?
I'll
They
tell you
can't.
what.
No one's going to buy an iPhone for 3,500. I mean, you can't. The only reason why these iPhones are selling is if you go to AT&T, they give you quote unquote a free phone, but it's not free. You have to sign up to a 3-year deal, and they hit Touchdown Thomas every month with a finance charge
They trick me with that all the time.
so nobody's buying the phone outright. So now if it goes to 3,500, it's unaffordable. It's unaffordable for most people.
Right.
Okay.
If
So
they manufacture it here. But the point I was making about
what do you
what
mean
Trump
if that's what he wants? He's all over them to do that. So that potentially could happen, but it's gonna hurt. Now let's just spend a minute talking about the Walmart news. Okay. You don't think that that's a problem?
Yeah, I mean,
Walmart said they have to pass on the tariffs to the consumer. Okay.
at
So,
some point they don't know how long.
no, they're passing it along right
Yeah,
now. Go read it. They're passing it along. They have no choice. Okay. Which everyone's the same. And then Trump comes out and says, we'll be watching you if you pass it along. Well, what do you expect them to do? Lose money? You want them to lose money. A company should lose money and not have anyone pay for it. They should just be a losing entity.
yeah.
It,
I don't think Trump should be telling you. I mean, if this is a real capitalist society, which Trump, is making it out like. like it is, right? Free markets, all this. He shouldn't be telling Walmart what to do.
Yeah.
That's.
I mean,
But
listen,
the point I was making about what
I'm
Trump said in terms of setting the tariff rates in the coming weeks, that means we are going to have tariffs. That's the point. He's going to be setting
we always
tariff
have
rates.
tariffs. We always have
Right.
tariffs, and no one
Well,
knows what they are, but we've always had them.
right,
They,
but the market is
they're
trading.
taxing European. Listen,
The
they're
market is
taxing
trading like
European.
there are going to be no tariffs, right? So there's a big dislocation between what certain parts of the macro market, like you mentioned, the dollar and interest rates, and what Trump is actually saying between what the stock market is doing. I see a big dislocation, and I don't know. This wasn't the headline that people were looking for the market to come off. So I'm a little bit
Why?
leery if
Why?
this is
Why?
like what?
This is every headline is an excuse. That's all. It's an excuse.
Yeah.
So the debt downgrade, okay, is today. The market's down 60. It barely went down. Okay. It's down 1% ish. Okay. And they'll shrug this headline off by tomorrow morning and you'll never hear about it again. That's the market. Okay. But looking at the underpinnings of the market, is you're saying the market is thinking there are no tariffs? I mean, they've already said no matter what, the minimum tariff is 10% minimum. Okay. There's 25% on European autos, there's 10% on UK cars, there's, tariffs all over the board. So I don't know. And you're saying this week he's gonna readdress the tariffs? I mean, he already has them in. What's he gonna do? My better question to you, what I want to know is where are all the deals? Where are all the deals? Like, why don't we have deals? I mean, weeks and weeks and weeks have gone by, and we've only had one deal with one country, and it's not a full scale deal. Okay. So, where are all the deals? They don't want deals. They don't. If they wanted deals, they'd be parading every head of every country into the White House, okay, to come up with deals. They don't want deals. They can't have deals. The reason why they can't have deals is simple because we need the revenue. We have a debt issue, a massive debt funding issue here, okay? Massive. That you now know what's going on. The US is now refinancing debt at these levels, which is the highest bond level that we've had in years, years and years and years. Can you put up a 10-year chart on the bond? I mean, it's got to be unbelievable to look at, you know, like
Yeah, we can do that. Give me a second. Sure.
yeah, I mean, it's unbelievable where we are compared to where we were. It was easy to finance the debt when rates were at zero, but now rates are, they're coming in on the short end. And I think it's interesting. If you look at the yield curve, it's really steepening fast. So that normalization also leads you to believe that rates are going to go higher because when the curve is flat, it usually means that longer term people want to own longer term rates. Right now they don't. Right now no one wants to be in long rates. The 30-year is trading above 5% for the first time in a really long time.
So
I
here's
can't.
your 10-year yield top panel. You have your yield curve middle panel, and then you have your break-even inflation lower panel.
Well, where's the 10? I can't see it. Where is the 10-year, the actual 10-year, the
10
top?
years right here, 455 and a
Right.
half.
So if you go back in February, go back to February, it was higher than this. I can't tell where we are.
We're pretty much at the same spot we were at in February, maybe a little
Right.
higher.
And then if you go back into the end of last year, we were what, 475 back here?
We
I don't know.
were right at four. Actually, let's see.
No, go to the top of that.
We closed last year at 457.
Right. So we're flat on the year. So it's a non-event, and it's not going to be a critical event until it ticks higher. Um,
I
that
mean,
being
technically, if you want to look at this in a technical way, you have a you have a little potential breakout here to the upside. Let's see if that actually happens.
Oh,
But
I think it's going to happen. I think we're going to take out, basically the highs going back to last December potentially. But to be honest, equities are holding up. So you got to watch today. The weird one, and we're long it.
I'm
We
saying,
think,
like, equities are holding up. I mean, it's the kind of news event that you're kind of looking at and you're thinking as a trader, maybe the market kind of does something that's strange, which is just buy this bad news yet again.
dude, they've bought every other downgrade. Why wouldn't they buy this? I mean, I've lived through every one of them, but
What
they're
does that
they're
tell you about Moody's and this whole thing? It just goes
doesn't
back.
tell me anything. Besson said they're late. I don't know whether they're late or early. They said it, so you know, I don't know. So
Now, what I did notice last week was on Thursday and Friday, you had those safe high dividend stocks start to outperform late last week as the market is going up and up, which is a bearish kind of rotation, right? So, I actually added some of those stocks to pair with my short positions. I bought Johnson and Johnson, bought really, really quiet stocks like General Mills.
hmm,
You look at a chart of General Mills, that thing has gotten hit. Now, these aren't sexy stocks by any stretch, and I was telling a couple of friends of mine, they're like, they're full of FOMO. And I'm like, look, where were you 10% down? You didn't want to buy, you want to buy now. They're like, okay, well, what are you buying? I'm like, I'm pairing my short trades with General Mills, Johnson and Johnson. Both of those companies have some upside if Trump opens up the door to some of our pharmaceutical and agricultural products and food products overseas. I have some energy plays, so deep value, high dividend, low volatility. That's what I got into on Friday.
nice. Maybe that's the safety trade. I don't know. I mean, I just think it's rotating in and out on a daily basis. Again, I'm shocked, to be honest, where the market is right now. We talked about bonds. That's really our biggest cue to what we're looking at here. Keep an eye on that. Dollar weakness today. See if it holds weak and gets weaker into tomorrow. We're long the euro. We're also long gold, which has been a very aggravating trade, back and forth and back and forth, and we're what I would say in the middle of nowhere. It looked like it was going to break down. It didn't. Um, and now it's not definitely not breaking out to the upside, especially when you see the debt downgrade and all the things out there. For it to only be up $40-50 is pretty, that's like an average nothing move for gold nowadays. So I don't see anything there. We're long that if we get another $50 to the upside, so 3,300, a little lower, we're going to get out of our position. I'm hoping to get that. I don't know if I will. It's been very frustrating. I know you're my resident gold bull, so I'll let you talk a little bit about gold. But I'm telling you, just from being in it, it's been frustrating. Over, here is a commodity that's literally gone straight up. Okay, and now it kind of has news that it should be going higher, and it's not. So it's getting me a little bit afraid.
Yeah, it'll go higher, just probably not on this news. And again, I think I mentioned this before. It feels like all the real action in the market is coming during overnight trades, overnight trading. Like, I wouldn't be surprised if the market just does nothing from 9:30 until 4 today. You talk about
Ay,
gold.
ay, 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 ay.
Yeah, yeah,
Dude, ay, ay, ay. It's literally you say the same
yeah.
thing.
Under
You're
kind of,
you're
yeah.
actually, you know what? I don't know if you're robotic or whatever. You say the same thing every day. I
Well, it's
mean,
been
yeah,
working.
okay.
What can I
Yeah,
tell you?
I don't think it worked on Friday. The market ripped. Okay. We were short a call spread. Okay. And we got max loss on our S&P trader call spread. So the market is ripping. It's going outside the parameter of this
Yeah, but
straddle.
yeah, I mean S&P 500 only went up what 41 points on Friday. Is that a lot? It's not that
It
much.
is when you're selling out of the money, spreads that are 20, 25 points out. That's all they give you. You couldn't sell 40 out for and get 50 cents for it. So these things have come outside. The volatility, thank God, has ticked up a little bit today. So there's a little bit more in this stuff because the market's down. I mean,
So let me ask you a question. You max lost on Friday. I'm sure the strikes that you chose weren't that far off from where the market closed.
they
I'm
weren't
sure.
that far off, but there was nothing in it.
So here's my question. You know the market needs more time to drop. You know that, right?
No, I don't know that. How do I know that? I don't know what's going to happen today. It might drop 200 points today or 100. How do you know what it's going to do? If
Well,
you knew that, you would.
what I really wanted to ask you is, what your thoughts are on rolling some of these credit spreads, and like what the best way.
Eric, there's nothing in it. So there's no best way. You either don't do them, which is probably the better solution, or you sit tight until volatility picks up. So, like Thomas, where is the straddle price today? He's going to look it up. But wherever it's priced today is probably a little higher than Friday, which was $30 or whatever it was. And it went outside the bands of that.
35 straddles at about 35.
36. That's way too low.
That
Way
is
too
a
low.
low straddle. Wow. Wow.
Right. So that's what I'm saying. So there's no trade here. You got to pick the direction right because if you don't, all that has to happen is the market moves 30 points against you and you start losing. So it's a tough one. We'll be playing it today, but I'm not exactly sure. Probably sell a call spread, um, but I want to wait for the market to rally off the opening, which I think it will. A market that looks interesting to me um, is Bitcoin. Just sitting at like 102. Okay, and it's weird. It won't go below 100. I'm surprised it's above 100.
It was
Given,
trading above 105 last night.
yeah, but it's still not taking out the high. It didn't come close to taking out the high. So I think potentially the next move is down, but I'm not 100% sure. We're short micro strategies and we're short Bitcoin here. It's been a frustrating one. And we're going to sit in those positions. But I keep staring at my Bloomberg here, and I'm looking at the bond market, and it's an unbelievable move. I mean, the S&P. If the S&P had a move like this, it would really be a good trading day. But they've taken the downside away from us. We had unbelievable trading and volatility for literally only a 2-week period, maybe 2.5 weeks, and then it's back to the same thing that we have. So, again, market will be probably flipping around today. Hopefully, we close near the lows and we get back into a down move here. That's what we're positioned for, and that's what we're hoping for. Again, we gotta wait to see what happens, but there's a lot of underlying things that look really negative here. So I'm shocked that the market is holding up. And Trump is back in town. He doesn't have a lot going on. He's pumped his coins. He's taken a plane from another country. It's interesting. He spent so much time in the Middle East, which was shocking, going from country to country. And I'm not getting it. Why he's so enamored by that? They're those countries are one trick pony. Okay, they only have crude oil. That's it. That's all they have. And eventually, I don't know if it's 50 years from today, 100 years from today, you got to think oil is going to become obsolete in every, they're going to come up with other forms, whether it's all electric cars, more fuel efficient, all this stuff. So, they're countries that are, you know, dealing in something that,
Saudi Arabia knows this. That's why they're trying to diversify out of just being a one-trick pony as an oil
okay.
producer. They're trying.
Now they're gonna produce chips and everything else there. So and everyone's opening up a hedge fund there. It's pretty amazing. But
Citadel, Bridgewater, and Hudson. What's the name? There were three. Yeah, so there were three big funds that are going there.
Hudson River, whatever,
Hudson
Hudson
River.
River,
So
whatever. I
it was
mean, they
that.
probably should have had offices there to begin with. I'm shocked they didn't. But
Isn't
again,
it interesting how Trump went there and then literally like the next day they're opening up offices in Saudi Arabia?
what do you mean? They were all there when Trump was there. Ronald Lauder from SD Lauder was like parading around with Trump. Um, everyone was there. All the tech executives, they were all dancing, dancing in the desert. So we'll see what comes out of that. Today, keep an eye on bonds. Keep an eye on the dollar. Again, the market's slow. And we're down like what, 60 or 55, and
50,
it's just it seems slow.
60. You're right.
Right, we're down 60. Seems really slow. So until we get down 90, 100, just sit tight. Don't get too aggressive. But if we go down that number, I believe that we're going to go down, further. So keep an eye on that. Gold is a no trade. We're long it. It's a no trade. We're hoping it rallies. I don't know why it goes up or down. I mean, looking at it's just a mindless trade. We bought it because we felt it was oversold off the high. We've been stuck in the trade a little bit too long. We're up money on it, but we're stuck in it. And at some point, maybe it's worthwhile to take a shot to the long side on bonds, just not yet. And that's really what I see. There's not a lot of news related stuff, it looks like, for this entire week. There's stuff later in the week, but not a lot. So don't expect a ton of news. Keep an eye on, headlines out of the White House. He's back in town. So I don't know how long it'll be quiet for, but um, it's interesting because no one really knows what's going on with tariffs, what the White House wants, what he wants, and maybe we'll get some more conclusion on that as we move from here.
Yeah.
I don't know if you want to wrap with anything. I'm pretty good here.
Yeah, I'm just going to share this chart of the ES futures with you. I shared it last week, and I shared that point of control level at 5908, which is this red line. What this chart is looking at is volume by price, and it's measuring the price level that had the most volume over the sample. So over the last week, even with all those gap ups, like I was mentioning, the market looks like it bought higher levels, and the level that it bought most was 5908. I mentioned last week that this level is probably going to be like a magnet, both to the market trades above it, it's going to head down and retest that level. It trades below it, it's going to start. It's really going to play around with that level, and I think it's going to continue to play around with it until there's some real news out there. I'm just not sure Moody's is the right is the right trigger here, but we will see. So we're right back at 5908. I think that remains a critical level for the ES. And to me, I just think we're going to dance around that for a couple of days.
Yeah,
That's
but
what it's shaping up to
I had
be.
a question. You're saying 5908. Okay, the thing traded 59 like 70 something. So I don't understand. If you bought 5908, how are you not making money? Okay, and you're saying level of control and where the volume is. I mean, we've been well above that. So anybody
Well,
that's
we
long
hit
could have gotten
5970 and
out.
we crashed right into that. Now it happened because of Moody's, but look where it's kind of
Stop
holding
with the
firm.
Moody's. Stop with the Moody's. The market would have been down without Moody's. Okay. There's something called expiration. Okay. And expiration, which I've been using for almost 40 years, was set up to the buy side. So, legitimately, last week, no matter what you could do, the market was set up to cash out on Friday morning at the highs. Okay. And now we're in a position where hedges are on and the market potentially could trade lower. But when you're saying 5,800, 5808, or whatever, 5908, whatever
I know
level you're saying,
control.
but control of what? I don't understand. We're at 13. If you bought oh 09s, you could sell 13s. Like what are you saying? Like the level of control of what? Like I'm just saying why right now we're at 17. So anyone that bought that level is up money. So what are you saying? Like I'm trying to understand how you're picking up on that and how you utilize that when the market's traded $60 higher than that and you're saying there's
Yeah,
volume there, but
that's
that
the
volume could have
$60.
sold out.
If you think that point of control is a magnet and the market is trading 60 points above that, that's a great time to sell.
But why
And
is it a
without a
magnet?
news headline, without a real news headline,
That magnet has
one that
no power.
definitively, one that definitively turns sentiment negative. If it's trading 60 points below that, I wouldn't be
But the
too
thing is,
aggressive below that either.
you keep bringing up the Moody's thing. We're trading where we're trading. The Moody's headline has been out, digested for 3 days, so we're trading here. So you're saying like the Moody's headline is going to throw. Listen, I think we're going
I'm not
below
saying it's going
59.
to
I think
you
we're
say
going
the
below 5,900 and
saying
closing
Moody's
there.
headline is whatever. It's nothing.
Right. So that's what I'm saying. It's in the market. It's already here. We're at 59.15. And the question is, what do you do? And you're saying oh 08
Why
is
would you break
control.
that
Oh
level?
08
Right
is
now,
control.
I'm
Okay.
flat. I'm out.
Good. I get it. I'm asking a question and you're not letting me ask it as usual. We're at 50, we're at 5907. What does that mean? What do you do? I'm just trying to understand when you're saying it's a level. It's interesting. Like we look at different levels and whatever, but we never utilize it in that way. Like, okay, so what do you mean? We're above that now. Does that mean the market's okay? Does that mean it's going to trade below? Like, what does it mean? Like, if we get to 5,900, does that mean the level didn't hold? I'm just trying to get an idea.
Now, you have to kind of see how it trades around that. If you see a big 20-point spike right through that, that's a rejection. But look how it look
It's
how it
gone
approached
through
it.
that.
It
It was
approached
through
it
that this
tepidly.
morning.
Yeah, but it approached it very tepidly, and it traded below that for a very, very short amount of time. And as you know, it
I
didn't.
know, but if I'm using that level, you're using that level, I guess, to buy. I'm not, I still can't get it out of you.
No, I'm
But
just.
if
It's
you're
not.
using that level to buy, okay, it's gone above that level, below that level multiple times this morning. And here we are. But I don't want to harp on the level. So what I'm going to say to people that are
Yeah, you're
watching
right
us,
there, right
I'm
there.
gonna I'm gonna say to people that are watching us, we're watching that level. I'm not exactly sure what that level is doing for us, but we're watching that level. If it goes below that level, I'm assuming you want to get short. That's you. It won't come out of you. But if we
It's
go
not.
above that level, then you don't want to get short. So listen, we're running deep.
Not that cut and dry,
We're
but
running
you know it's
sideways.
not that cut and dry. You
The
know that.
one thing that I like to do is I like to, have some certainty. I want to try to give our audience points and reference points to do certain things. Um, so I'm going with this. If we go below oh 08, you want to be short. If we stay above oh 08, you know, just probably a no trade. And we'll keep an eye on those levels. Keep an eye on the bond market. One market we didn't touch, but I want to touch a little bit more on in our next podcast tomorrow is the crude oil market, which is hanging at like 62 and a half. After Trump's visit, you would have thought it would have a lower handle. So maybe the next move is higher here. That's what I think. But we'll get into that tomorrow. But we're running deep. We're only 15 minutes before the opening. Again, if we rally a little bit, I would think it would be okay for the day to sell zero DTE out of the money call spreads. We are long the euro. We think it trades above 113. We'll look to get out there. We are long gold. I'm hoping for another $50 to $70. I thought it would even be stronger than this. So, keep an eye on that. And we remain short Bitcoin, and we remain short the S&P and the NASDAQ through spreads that are out in August. So that's everything we got at Trading with Larry, in full disclosure of our positions to our subscribers. And I wish everybody a good trading day, and we'll be back tomorrow. Peace.